What is up, everyone? We have a very important news for the stock market going into the following week. We have the 7 most important stocks in the whole S&P 500 representing their earnings reports in these next couple of days. Now, this is important to you because the Magnificent 7, otherwise known as Google, Microsoft, Meta, Apple, Nvidia, Amazon, and Tesla, are going to represent what exactly is going to happen with the overall market. Now, this is important because they hold a large portion of major stock market indices like the S&P 500, which means that just these 7 stocks are pretty much holding up the S&P 500's major gains, and it's going to determine what's going to happen for the overall schematic going into the quarter. All we have to figure out now, though, is if something were to happen and this were to sell down, we have a major gap of inconsistent buying because it was pre-market and post-market from 605 all the way to 602.94. Now, I'm anticipating that if we do break above, we would need a huge clearance from specifically Nvidia, Tesla, and Google to actually make the biggest movements. Nvidia has a pretty product. Their revenues have always been growing. In these past couple earnings reports, Nvidia has been carrying the market, so we want to see how that is going to react. But again, 610 is a major point. Looking into the 1 hour chart, you can see a flat rejection of a double top somewhere around that 610.57 level. Huge demand set forth at around 606. If we break under 606, I can see a huge movement of buyers, of a huge buyer and imbalance from 605 all the way to 605.31. So look out for that to see how we expect to go into the market. We could have some pre-anticipatory runs where the overall S&P 500 can move closer into 610, right? But if we break under that 607 area that I was talking about, we could easily test back down into 605 going into the rest of the normal gap fill. Now let's first talk about Google. Google has an actual earnings report on February the 4th of 2025, and there's a lot of investors actually pretty much bullish on Google's sentiment. Earnings per share analysts are actually forecasting an EPS of $2.12 for the quarter ending in December the 2024, which represents a significant year-over-year increase of about 29.27%. The consensus estimates are pretty much showing a huge performance where Alphabet has always been very consistent in these earnings reports, but we really got to see how it's going to perform if they could actually deliver a 29.27% increase. Now, let's take a look at the overall general stock. If you take a look at the screen here, we can actually see here Alphabet has had a huge trouble trying to break above this 201.37 range. Now, I've identified this chart. You can see here the red markings are indicating a huge overall supply. Now, what I consider supply is a huge imbalance of selling occurring at a certain range. Now, let's take a look where Google actually established this first supply. On December the 17th, they've had trouble breaking above the supply, creating that first supply at 201.49. You can see the second time, we've also had a huge rejection at that same exact spot on exactly January the 7th. And now the third time overall, we're trying to break above that at January the 21st, still having some trouble to actually break above that huge supply. Now, we are heading into an earnings, and typically with these earnings, there is a pre-anticipatory run. Some people like to call it a FOMO run or a huge consolidation where people think that the earnings report is going to be reportedly bullish. So there's going to be some cases that we could actually eclipse and break above these in supplies. Now for Google, I don't really expect this to have a huge run, maybe around 210, but overall that is going to be my expectation for Google. Now, if you do have an anticipatory run like that and it goes into 210, you got to be very careful not to buy into that range because quite frankly, a lot of these news and sentiments and stock movements are all based off of human emotion. So this could be just a baked in price movement. So you got to be very careful for that. If something were to happen and we stall around this price point, honestly, I would take that as a pretty good bet. I would just make sure that we understand that there is a huge developed demand at around that 188 area, and I'd be very wary and careful of that. Now, into the next week, we could see this rejection of the supply again, test back into the 188. I can definitely go long for certain day trades to prepare into the earnings at around the break of the 201.96 spot into 209 to around 210. Next one on the list is actually going to be Microsoft. Based on the earnings per share reports from these analysts, they are expecting Microsoft to earn an EPS of $3.13 for the quarter ending in December 2024, which represents a year-over-year increase of about 6.83%. This expectation comes after Microsoft's last reported earnings per share was $3.30, surpassing the consensus estimate at that time. Now, revenue is a big thing for them. The revenue forecast for that quarter and this quarter is approximately $68.72 billion, which would be a year-over-year increase of about 10.8%. Now, cloud segment for Microsoft appears to be the biggest focus into this quarter, there's a keen focus on Microsoft's cloud services, particularly Azure. Now, Azure, with analysts looking for growth in low to mid 30% ranges for the fiscal first quarter. There are some concerns though. Many believe that the deceleration in cloud growth, with Microsoft having warned that Azure's growth could slow between 31 to 30% for the second quarter. AI contributions are going to be very big for Microsoft, right? We want to see how Microsoft is going to advance in AI, especially through its partnerships with Open. Now, looking at the overall stock for Microsoft, right? We've been ranging from around 460 to 420 with no major movement since the end of July. This is very important to understand because it seems like the market seems to be in a rangeful moment into the daily chart. If you take a look over here, they've been holding very well from 420 to 400. You can see a huge indication of multiple buyers stacked up in these ranges in these yellow actual circles. So we want to see here how Microsoft is going to perform from a technical standpoint. Very clearly, we can see huge stack supplies of around that 456 spot and another spot at around the 445 level. Now, why this is actually important to you. If I am a day trader, if I'm trying to participate to try to make money into this market, I want to understand that we obviously have a huge amount of buyers at that 420 level. Meaning if we do decide to go ahead and short this, if we're bearish on the bullish sentiment, bearish on the actual earnings estimate, we want to see how this is actually going to react to break down into that 405 level. Now, I'm bullish on Microsoft on a pre-anticipatory run because their earnings report is set to be on January the 29th, which is a couple days from now. I want to see if we could actually break above 447 to have a pre-anticipatory run into 445. Going on to Meta, I honestly think Meta has had the best run so far in comparison with Nvidia. Meta has had a huge pretty much price movement where they had a huge run from 617 all the way to around the 649 range at this time of the recording. And what I'm seeing so far is this is what analysts are actually expecting for Meta at this time. The consensus estimate for Meta EPS for the quarter ending in December 2024 is around $6.84, which could indicate a year-over-year growth of around 28.3%. Now, this is pretty much a huge movement because of the user growth. There's an expectation for continued growth in daily active users and monthly active users across Meta's family and apps. Although the company a huge user growth expectations in the previous quarter, there's hopes for a rebound with some analysts expecting daily active people to grow at around 3.31 billion. Now, there are a lot of people that actually moved from TikTok to Meta to prepare for the fact that they understood that people were potentially going to have TikTok closed. The next one is going to be its AI infrastructure and investment. Meta has been clear about significant investments in AI and infrastructure. The expectation is that while these investments will drive future growth, they will also lead to higher expenses in 2025. That's key. This has been a point of focus with some concern how these expenses might impact short-term profitability, otherwise known as these quarterly reports. Now, Reality Labs, investors are watching for updates, which has been reporting substantial losses. There's curiosity about whether these losses will continue to widen or if there are signs about stability or growth. Advertisement revenue is pretty much key for Meta. That's how they make money inside the actual Facebook website when you see the ads in the corner. A key area of interest is the performance of Meta's advertising business, expecting, the integration of AI for better ad targeting. Analysts are expecting robust growth in ad revenue, driven by both improved ad technology and broader markets recovering in the actual digital advertising. Now, the overall reaction, given Meta's history of beating expectations, right, leading to positive stock price movements in the overall general term. The last earnings report, even though Meta actually missed, they honestly only dropped from $600 all the way to $594 in that same day. So what is the actual expectation that I'm seeing from the stock? You could actually see here for Meta, you can see a huge break above that 636 range, which is telling me overall, with their earnings report coming in on January the 29th, that they're already having a pre-anticipatory run. But how far can this go? My expectation is we do break above 652. I can see this testing into to around 670. I'm not too sure that this is going to have a pretty much a huge movement down, because if we do somehow reject this level and we test back into this new demand turned into a supply, right? Because this supply is now taken out. We have a new rally-based rally established demand at around that 627 spot. I'm not saying that this can actually potentially move down that hard, but if we do have a failed earnings report, I don't see this testing any lower than 622. Now, if we have a positive sentiment, the last time Meta has had a huge run after an earnings report was actually not for quite a while. But the last time we did it was February of 2024. Well, we have the same sentiment. They gapped up extremely hard from 397 all the way up until 486. Can we have the same repeat of history, right? Can we have that same history where we could potentially gap up into the 672 level? Only time will tell. But I want to make sure if I'm day trading this, I want to trade this if we have a huge run above the 652 highs, because it's showing me that people are obviously bullish into the pre-anticipatory run for the earnings, and I'm going to go ahead and chase after it, and you should too. Personally, Apple has the best setup that I'm seeing so far out of the Magnificent Seven. Here's what actual analysts are actually expecting for the stock. Analysts are forecasting an EPS of $2.36 for the quarter ending in December 2024, which reflects an increase of 8.26% year over year. Revenue expectations are set for $124 billion for the first fiscal quarter of 2024, suggesting a modest growth from the previous year. This is slightly above the consensus from sources, which pegged revenue at around $124.12 billion. iPhone sales are going to be very important for this previous quarter earnings report. The market looking for iPhone sales to be a key driver of the earnings. Analysts are focusing on how the iPhone 16 performed during the holiday season, given that the Q1 report will cover October to December sales. Services are going to be very big. I'm not sure if you're aware of this, but if you purchase any Apple product today on the websites, you could actually see that they add or have some sort of add-on to these. For example, when I bought my AirPods, you could actually have Apple Music or other services tagged on into it for a trial period. This will entice their huge customer base to try to enter into their services ecosystem. This includes the Apple's App Store, Apple Music, and iCloud and other subscription services, which have been a bright spot in recent quarters. Now, there is a big thing about AI and innovation. Honestly, it seems like most of these stocks participating in the Mag 7 have had some sort of stint in actual AI. In this case, Apple Intelligence for the iPhone. I want to see how this is going to impact certain businesses. Are businesses going to be using Apple Intelligence? Now, that's going to be very important to decide how the actual stock is going to perform. What I find very interesting about this stock in particular is that this has actually sold off January, all the way down from 260 at its peak high, all the way down into 220.47. Now, this is a very interesting spot because they've held this territory back in October the 7th of 2024, and a second time over on November 4th of 2024, and for a third time actually in the past couple days, January 22nd. So it's very clear that there is a huge, movement of buyers. There's a huge actual prop firm, bank, hedge fund, whatever you want to call it, huge banker that's actually purchasing Apple at this price. So I want to see how we react. Are we pretty much baking in to see what the reaction of the earnings report is? Because if that's the case, this is likely going to stall and actually wait for a huge movement. Now, if earnings is going to go ahead and be bad, I can see that this could sell down into the 214 territory. We've held this spot back in September the 17th. So what am I saying here? If Apple were to sell off the day before the earnings report and go all the way down to 214, I want to see how we react to see if we bounce this territory similar to how we performed on exactly September the 16th. Now, if we have a pre-anticipatory run and we break above this bullish consolidation or falling wedge, we could have a pre-anticipatory run to 236. Now, in the case that we gap because of the earnings report and gap up to 238, can we pretty much break above that spot into the 246 level? There are a lot of ways that this can go. You need to figure out what happens in these next couple days. What I'm basically saying is if we run up above this bullish consolidation closer into its earnings report on January the 30th, you need to see a reaction to that price. Now, if we gap down and we defend the 214 area, that could be a good opportunity to go ahead and go long. There are ways that you have to work around this. Trust what the chart is seeing. And going into the stock market tomorrow, I'm going to go ahead and take a trade on this if we break under 219. I'll go long if we break above the bullish consolidation. But the day before earnings, I'm not going to be in any trade for this because as you could see, the day before the actual earnings actually happened, it sunk all the way down, it gapped down. And once the earnings report was actually released, the market pushed right back up. So I see this as a good spot for you to take a trade before the actual earnings report. Next on my list is actually going to be NVIDIA. This is what everyone is going to be taking a look at because this has been a major driver for the overall S&P 500. Now, NVIDIA is expected to report an EPS of 84 cents and a revenue of about $37.5 billion. Now, this is a 70% increase year over year. The spotlight is on the data center segment, projected at around 32.5 billion. Driven by the AI chip demand, there's been a key interest in the new Blackwell architecture for the actual chip production and demand for it. Gaming and other segments like visualization and automotive are also expected to grow. Investors are going to await guidance that could significantly influence Nvidia's stock movements based on meeting or exceeding these forecasts. So what these are actually showing in the actual stock chart is that the overall theory is if Nvidia is going to continue to ramp up the production of its Blackwell infrastructure for those chips, that could go ahead and shoot Nvidia's revenue way over past the expectations. Now, what I find very interesting for the stock is that this has been consolidating since October. You can see a huge range consolidation from 153 all the way to around 127. Now, what I'm going to say to you, if you plan on trading this before this earnings report, we've seen a huge rejection of the demand at around 149. Now, if we have a actual pre-anticipatory rejection of this closer to the demand, we want to see this move down from that 140, 141 spot all the way down to 131. Now, if this is going to actually break its earnings report, regardless if we're in the demand zone or if we're above the supply zone, I can see this catapult above into the 170 to 180 area. This is actually in line to what a lot of analysts are reporting if we have a strong break of its actual earnings report. Now, if there is a huge expectation where they miss the production or there has some sort of delay or they're not making enough of these actual architecture Blackwell chips, then we could actually see this default all the way past down into the actual 110 to 102 level. You can see clearly that this area is going to be a place where people can day trade this if we trade this all the way down to 129. Now, if we miss earnings, low side 110, 120. We break earnings, we could break above this 152 spot that's been struggling to break into 170, 180. That is my expectation for it. Now, if you guys love content like this, do me a favor, shoot me a follow my Twitter as well too, as I give daily updates on everything crypto and stocks, and come my Discord group where I announce my day trading alerts. Thank you so much.